doing some stuff. XRP's getting a blast off this morning thanks to the release of the Hinman emails that are now unredacted. I basically retweeted this tweet from Eleanor Tourette. She's the one that's dropping it, I guess. The Hinman emails PDF. You can just go to my Twitter page and grab it yourself if you wish to read it. I got it right here. I went through it briefly, and to be honest with you, I didn't see a whole lot of stuff that had anything to do with XRP. You know what I mean? Like, so I'm not exactly sure what's going on with this exact PDF. Maybe I got the wrong one or something. But basically he's just going in saying that, you know, some of these things can be considered securities, some can't, depending on if someone was basically looking to gain profits by investing in it. It's just, you know, I didn't see a whole lot, but maybe this isn't right. Like I said, he doesn't name XRP at all in this document, so maybe this is the wrong one. But another important news that is really good, that we have House Republicans introducing a bill to remove SEC Chair Gary Gensler restructuring agency. Let's do it, because basically you can't take a 1931 law and apply it to today's times. Correct? Good stuff. We all know that Gary Gensler was with cryptos when he was still teaching at MIT, but when he gets the job to be the SEC, he basically goes complete opposite. That's because the people who got him in are against cryptos. So, yep. A pair of House Republicans introduced a bill to remove the Securities and Exchange Commission from his post. Representative Warren Harrison from Ohio and House Majority Tom Emmer, aka Whip, from Minnesota, introduced this SEC Stabilization Act that would restructure SEC and remove Gary Gensler from his post. The lawmakers point to what they say is a long series of abuses that have been permitted under the current SEC structure, and that's true. Like, he's literally trying to push cryptos to our enemies. I'm a trader, so I like it for the fact to be able to trade it, but I also want to be able to cash out in the future, and I don't want to have to do that by moving to a different country. David's and Emmer's bill would remove Gary Gensler from his position leading the SEC and restructure the commission to redistribute the power from the chair to other commissioners, add a sixth commissioner to the body, and create an executive director position to oversee day-to-day operations. Yeah, it's good stuff. So yeah, I also posted on Twitter a video that is super important. It's not my video. Please jump over there and share it. All right. It is not mine. It is Altcoin Dailies. It is a fantastic video. Go watch it. Share this tweet. Let's get this thing popping over here on trending. We want the whole world to know, right? The whole world to know that we are on board with this. This guy is blatantly using his power to do what he should not be doing. I mean, why wait until the election season to start this crap, right? Well, because they think that Biden's probably done, so they need to push this agenda quickly and get it through, turned into law or whatever. So we need to get this thing popping. Hope you got your coffee. We're going to be checking out some assets, XRP. We are a trading channel. So basically that's what we're going to be doing. We are watching Bitcoin. It has made a fresh daily high today, and it has taken out the last 2 days' highs. So this is an area where if we were looking for short positions to continue, this is the place where we would look for that to happen. However, we have a very important information print from CPI, which is inflation. So basically they have moved it. We didn't have, last time I did this, they did not have a forecast yet. This area was blank, but they're looking at a 4.1% drop. So that's a pretty big, 0.8% move to the downside. And you can see here they were expecting 5. Last time they got 4.9. So we want to see 4.1 or 4.0. Anything higher than 4.1 will be considered a miss and could be construed as bearish. However, we know that there is the news, and then there's the news, and then the market's reaction to the news are two separate things. So just because something happens that should be bearish or bullish for the dollar doesn't necessarily happen that way. Also, I have pulled up here the CME's target rate probabilities for June 14th. That is tomorrow. So huge week for news. Massive market volatility. Yesterday, we took a short on XRP based on the fact that I knew this was going to come out today. I didn't know if it was going to be bullish or bearish. But let's just briefly go over and talk about that entry and where we took profit. So yesterday morning we were watching the open. This candle right here is Monday's open, and we watched price trade up into it. We took a short position here and we took profits off on this candle as my entry was right there. Stop was above that high. So once I got to 2-to-1, which ended up being more than 2-to-1, it actually was like a 3.5-to-1 risk to reward. I took profits off and we must stop to break even. And then later on that day or yesterday at 2 o'clock, I got stopped out with this candle right there. So awesome short already into the week, starting with a good, strong trade, which is like, that's the way I like to do it, right? I like to start the week off strong. We got a couple Forex pairs and assets that we're watching. A lot of people are expecting dollar strength. We are the opposite. We are expecting dollar weakness based on a few things, right? There's some fundamental things out there that we expect the dollar to probably lose some steam because the dollar the euro is tied up so much to the dollar. We think that the Eurozone is going to continue to have to be tight on their monetary policy. In other words, they're going to have to continue to raise rates, which would thus give the euro strength. If the dollar pauses tomorrow, or if the Fed pauses tomorrow, 500, 525, and that's what the market is pricing in, that they are going to pause. That does not mean that next month they won't hike. It just means that this month there's a high probability that they will pause. That would be bearish for the dollar, right? So here's the euro. This is the yearly opening range. This is the area where we were looking to get long. Now, I could be wrong, and I will be wrong if we start trading back under the 2023 yearly opening range, okay? So what I mean, if we get back under this, then I will probably be wrong. This will be more than just a pullback, because here is the yearly open. You set in a yearly low immediately, like within 5 days of the open, then you moved up a month later, put in a high, a higher low, and then a higher high, and then you've come back in to retest this area. So whenever price is trading above the yearly opening range, and especially if it's been trading above it for the majority of its time, we consider that a trend. So if you count the amount of candles that has been traded under that yellow line versus how many candles that have been traded above that yellow line, that is a trend, right? There are so many more candles that are traded above. So we'll see. We don't know what price is ever going to do. We cannot, interpret price direction. There is nothing in the world that will tell us what price is going to do, but we watch very high probable areas, and that's where we look to take our trades. We look to get in, we look to get out. If we get in at a good spot and end up catching a beautiful trend to the downside, which is possible, then it ends up being beautiful. If you are new to the channel, welcome. If you are not, welcome back. For all of you that are not new, you will know that I am short on the USD up here at around 151,700. I shorted the USD via the Japanese yen. So essentially, I am short this asset, and I definitely want to see it roll over. However, this asset is structured bullishly. So, for the year 2023, I don't care about the year 2022. I already took profits on this trade, but I am holding still some, unrealized P&L. So I would love to see this break down and start to trend bearish, but that's not what's happening currently. And it has a lot to do with BOJ, the fact that they're not going to do anything different to their monetary policy. That could ensure that we'll probably see more weakness in the Japanese yen. So yeah, we may have to look for a play somewhere else to short the dollar. Can't short USD CAD right now because it's in the monthly support. It's been trading in this zone for a very long time. I am keeping track of time. I am watching it. We got 9 minutes until the CPI comes out. Right here is your range. It is this candle right here. That is the February candle. That so far is basically the candle that has kept the price trading inside of it. We did get out of it here in March and traded right up to this resistance and failed. It failed. It dropped back down into the range. Next 2 months were sideways AF. And then this month we can see that we are trending to the downside. Now we are only 13 days into this month. And if the dollar is going to react bullishly from this news, then we would expect this area to hold as support, right? We would expect this area to hold as support. Now we'll go in and see intraday just how far we are off of the lows. We're a pretty good piece off of the lows. So yeah, we don't want to jump on it just yet. We want to see if we get a breakdown and then a retest of this area to see if it holds as resistance. And if that is the case, then we can look to trade the USD Canadian dollar lower. There is an old saying that whatever direction the market was moving in when the range started, typically that is the direction that when it breaks out of the range, typically the direction that it was going in beforehand is the direction that you want to look to trade. But you can see for a very long time, the USD CAD has literally been trading in an overall larger range. So, I mean, it is what it is, right? So we base trend on what it's doing year to date. So January the 1st, every single year, that creates a new year, therefore a new trend. So we know that for most of 2022, this thing was sideways to up. And then 2023 happens and it looks like it could potentially be topping out. It did have its shot above the yearly open range. You can see that that area did absolutely hold as resistance. The monthly resistance was up here. So price got up there looking like it was going to be a breakout to the upside. And then the next week revealed the trap. So there's really not much we can do. I would love to see a pop back up to last week's open. That would be a potential entry for shorts, but I can't short it right here at support, right? You literally have very little reward compared to risk because we know that it has bounced from this area many times and will probably do so again. It is currently doing so. That is the weekly range. Very small range because today is only Tuesday. So this candle right here is your range. All right. That is if you don't want to look to short the USD versus the yen. And I could be completely wrong. So if I am completely wrong, you would want to be looking for shorts versus the dollar versus like the pound or the euro. I would choose the pound because the pound is up much further from its yearly opening range than the euro is. So in my opinion, that gives you much more potential profits to the downside if the dollar is indeed going to break out and become bullish. Here we are on the dollar. Now, I don't know how many of you were following me last year when we traded Bitcoin to the downside. We started to become short on Bitcoin over here, up at the highs, because in October of 2021, we knew that the Fed was going to do a 180-degree turn on monetary policy, right? They were going to become very hawkish, go from dovish to hawkish. So we knew the markets were going to come off for that. So we started to trade Bitcoin to the downside. Right here is the area that I am talking about. So this is your yearly opening here on Bitcoin for that year, right there. No, right there. So that's your yearly open. And when it was trading most of the year under it, I was bearish. I remained bearish. Now, I did take bullish positions because I'm a day trader in all of this, But the main trade, the position trade that we were looking for was once Bitcoin approached the yearly opening range, we were looking for it to potentially make a fresh yearly high and then roll over. And that is exactly what it did. On this candle right there, it made a fresh yearly high, taking out that candle's high, and then slowly lost its momentum, right? And then rolled over. Now, that is what I'm looking for to happen here. You can see it's similar, correct? Right there's the yearly open. You trade down, you trade up, you trade down, you trade up. But above the yearly opening range on this turn to the upside does not have the momentum that I would want to see if I were going to be bullish on the dollar. Simple. It's that simple. All right. So now if the dollar gets above this swing high, then obviously we will look for dollar longs. Okay, it's just the way it'll have to be. All right. But if it maintains momentum from this yellow line and under, we will remain short the USD. And it's based on this yellow line. I'm not basing this on any macroeconomics. I'm not basing this on what's happening in China or Russia or anywhere else in the world. I'm basing it on technical analysis because there is a lot of traders that do this. All right. So let's go back to Bitcoin because we are looking for a potential entry. I can't get long. Obviously, if you were going to get long, if you know me, you know where. This is the price at which you would have been looking for getting long. Right here on this white line. And this gave you several opportunities last week and this week to get long. Now, it does not have the bullish momentum I would like to see coming off of that line. It actually looks like this, right? Or this type of momentum here. We were looking for price to trade into 2-week support, held at 2-week support, and then start to rip back to the upside. That is not what happened, right? The bad news came out about the SEC literally trying to force crypto off seas, and Bitcoin took that to heart. The very next day, we seen a massive short squeeze, and then price continued lower, and this is where we currently are. Now, I did take a short entry, so I am holding a short. I would love for this thing to come up and stop that trade out. Obviously, profits were taken when this move happened here, right back down into support. Why? Because it's support. We don't look to sell into support, all right? So here is the current daily range. Let's pop that baby up. This is so you can see basically what's been happening. So you've been trading sideways. You've been trading inside of this day's range right here for 3 days, right? Very 3 days. Makes no sense. For 3 days, you've been trading inside of this downside candle. Traded inside here, took out the low there, and now you're getting a bounce, and you took out the previous day's high and this day's high. So the next area that we would be looking for Bitcoin to go up to would be 26,532 if it was going to continue to be long. But we know that it is coming into an area that could potentially be resistance. So depending on what the number is in 1 minute, we'll probably see Bitcoin react off of that. So here. So if you're looking for shorts, this is the area to do so. It looks like we got a bullish pop, but it came in lower. So this is bullish. We were looking for 4.1%. It came in at 4.0%. Hell yeah, that's what I'm talking about. That means inflation is coming lower. It is going lower. So we are not looking to sell this. We have to let it ride. So obviously the position was to get long at daily support, which is the way that we trade all the time. So I'm probably going to get stopped out of my short position. Let's get over there to the Coin M futures contract on Bitget. Unfortunately, they are not taking any new U.S. customers. However, if you're not in the U.S., there's a link in the description as Bitget offers futures trading and has the inverse swap, which is what I mainly trade on, so I can accumulate more Bitcoin. All right. So we're getting a nice little pop on that news there. That's good news. This is the area that we were looking for Bitcoin to pull up into and then roll over. That's what I said in Saturday's video. That is, of course, depending on if the news we get out of CPI and out of the FOMC is bullish or bearish, right? If we got a higher print, this is the area we would have looked for Bitcoin to roll over. But you got a lower print right there. That is good. That is fantastic. 4.0%. So basically, we've been bullish since June, or since the inflation rate made its high at 9.1%. I basically had everybody looking in the right direction since then. Basically, my whole thing is if we continue to trend lower on inflation, then what the Fed is doing is working, and then eventually they will have to pause, right? Because they don't want to over hike. So they are at restrictive territory right now, and it's working. You just got a 4.0 print. That means this is going to drop all the way down to here. 4. They are only 2 points off of their target rate. That is freaking beautiful. Now, the high was put in June of 2022. We became bullish on Bitcoin when before the FTX debacle. So obviously there was that, but I thought the low was already in. But this is the reason why we became bullish on Bitcoin. It is basically when we got into this green territory. This is what is considered to be undervalued per this metric, the MVRVZ score. And this metric basically is used to assess when Bitcoin is over or undervalued relative to its fair value. When market value is significantly higher than realized value, it has historically indicated a market top, which is the red zone up there. And then while the opposite has indicated market bottoms, the green zone down here. And you can see that right now, or for a while, we've been inside of this, what is considered at a good value to purchase Bitcoin. All right. And in its entire history, now that doesn't mean that it won't fail this time, but in its entire history, Bitcoin has always bounced from this area. All right. Now, this was the pandemic, this area right in here. So we don't really count that. We figure that Bitcoin on a normal pullback would have pulled back to support. Unfortunately, through the pandemic, it got a much lower push, but still nonetheless, this indicator has a 100% hit rate so far for identifying trend. All right. This is the only time in its history that it basically popped up nicely and then came back in. So will it come back into this zone in the future? It's possible. You're not very far from it. All right. So good stuff on inflation. That's what we want to see. Bitcoin is now coming off. Let's go back over here. Not too bad. I mean, this is the area that I expected selling pressure would show back up. So I don't know if you want to be a seller or not, but if you do want to be a seller, if you want to short Bitcoin because you think Bitcoin is garbage and it's going to zero or whatever your intentions may be, the price to do that would be 26,346. And obviously you would want to set your stop above the swing high right there. And that price, the swing high, is 26,435. All right. This is what it looks like on the 5-minute. Big burst of power to the upside, right up into that area. I don't see a whole lot of volume stacking up here, so I would suggest you not short this. This is really good news. CPI going down to 4.0 is really good news. Let's look at the other ones. Month over month, it's good. This is, well, it hit forecast, so that's good. And this hit forecast. All right. So this is the main number. This is the number that the Fed has a 2% target right there, year over year. All right. So that's that. That's all we were looking for. So, I mean, you can just go into the marketplace and look, right? Since we've been bullish, the market has been bullish, potentially, right? There's where we started to be bullish. Beginning of a trend. That's where we bought Bitcoin this year. Same thing with everything, like yearly opening range up. So people that are still thinking that '08 is coming, like, look at what they've missed. Say they're right. Say they're right. Say the big Uber bears out there, like Euro Dollar Zone University or whatever, and a whole lot more. Say they're all right. And we're going to see the biggest crash in market history. They have been wrong this entire year. We are in June. So if you want to be a market participant and try to predict what you think is going to happen, you got to be right. That's just the way it is. And they continue to be bearish and the market has been bullish. I mean, he just put out a video yesterday or today saying, can the markets go up even though, the data is suggesting that we're going to see more bearishness? Of course, the answer to that is yes. Yes, of course it can. But this is an epic rise. This isn't just a small rise. This is a up, pullback, straight up. Now, this is true that it is based on just a few tech stocks, but if the overall market becomes bullish, right? If the overall market starts to become bullish, look at the VIX climbing up to 15, getting a nasty hit. If the overall market starts to get bullish, if there's more green than red in that, that will lift the US 30, and that will also lift the small cap. And if you look here, this is the yearly open. So basically, if these two assets start to get a pop and start to make fresh highs, then the S&P 500 and the NASDAQ will continue its ascent. All right? Beautiful stuff. Beautiful stuff. The Dow Jones has been very difficult to trade this year, as you can see, because it has been very range-bound and choppy. But after it set a fresh yearly low, it traded up, and here we are at 34,095. There is that low, right? So nice move to the upside there. I would have liked to see it bigger, of course, but S&P 500 is into an area that people were expecting resistance to hold, and it has broken above. Now you're going to see other bears out there pull a fib from the all-time high to the very low, and they're going to say that we are still in a Fibonacci region where sellers could potentially show back up, and they are not lying, right? They are not lying. This is the yellow line all the way up to the blue line is considered the sell box, if you will. But that's according to Fibonacci. That's just one strategy. So they're still looking at this as a bear market bounce. They're not taking into the fact that 2022 is over and done. So most traders, all traders and investors during this time have already paid taxes on that. So this is a fresh new year. New year, new things happen, right? Different things happen. We move forward. We don't look to the past. We always look forward. Always. Keep your eyes looking ahead. Never, never look back. Back cannot be changed. The future, however, is yet to be told. So that's the way you got to trade. Now this thing is getting really, really lighted up over here. See this? The whole thing turns green like this. You're going to see a nice big bullish day. Now this could all be faded at the market open on Bitcoin because we still have a big news tomorrow, which will be the FOMC. Given what we know, let's refresh this because with lower inflation, this will probably get higher. It was at 72% this morning, so it has already rised. Yeah, so from just refreshing, it went from 82% to 88%. You see how that works? So while you can look at all these different data points, jobs and everything else to decide whether the fate of the market's going to be bullish or bearish, all you had to do all freaking year was buy the dips. buy the dips on your favorite assets, except Bitcoin. Well, for a while, Bitcoin was bullish at the beginning of the year, but since March, it really hasn't done anything. Anything. But the bears aren't killing it either. We know how fast Bitcoin can go to the downside. Like, this is when Bitcoin is bearish, right? You might get a month or two of sideways, but ultimately the third month, boom, down. We've gotten several months here. Several months. And you've only had 2 bearish months. And those bearish months don't look anything like what a normal bearish month looks like. In fact, looking at the monthly, starting from year to date, this looks like a pullback, doesn't it? It does. You've already liquidated last month's low. So whenever that happens, we have to go down to the smaller time frames and look for the potential next low to liquidate. And that's already happened as well. I'll go ahead and tell you there is no other lows until you get all the way down here as far as the weekly is concerned. So the midpoint of this bullish candle could act as support. And so far it is. Now, I don't like so far how this week is shaped out, but it's only, a couple days here. So let's see what the Fed says tomorrow at 2 o'clock p.m. They will have the minutes come out at 2, and then at 2:30 they'll have the press conference. Of course, we will stream that live. So basically, we want to see this range expand to the upside. We want this weekly candle to be the bear trap, so to speak. Now, if this finds resistance and rolls back over, we will still hold a bearish bias for the near term. But overall, we are bullish on the asset. Because these weeks just are not bearish, like super bearish, not compared to what it was in the past. All right. Good morning, everybody's future legends are here. Should we ape into XRP? Hell no. Hell to the no. XRP USD. All right. So, no. If you would have aped into that, look what you would have done, right? You would have lost all that money. You can't ape into stuff because you don't know where it's going to turn around at. Look at the volume up here compared to the volume down here. Hell no, you never ape into anything. If you want to buy an asset, you buy it at support. Jewelry, affairs. You've been with me for a while. You know how this works, right? So it found resistance here, broke down. So this could just be a liquidation wick. This thing is at quarterly resistance. Quarterly resistance. So you need a quarterly breakout, which in the quarter, the end of the quarter is coming up in 17 days. So although this looks good, because there's your quarterly breakout here, last quarter, this quarter pulled back into this quarter's range and got a bounce. That does look good. But 17 days from now, you definitely need to close above 53.84 because you're typically right at the open. Now, is this an area that you can look to be a buyer? That would be a breakout trade, and I don't like to do breakout trades. I like to buy support, right? Support. That's the areas that you look to be a buyer. I would rather you do it on daily and weekly supports because they have a tendency to hold better. Like, look at this daily support right here. If I pull this over here like that, look at that. So even though you did find resistance here and you broke down, look where it closed. So shorting it here would have made money if you were able to take profits on the move lower, but you would have been stopped out. Why? Because you never sell into support. You never buy into resistance. You buy at support and you sell at resistance. Never ape into anything. That is called FOMO. Aping is not good. Now, if you're aping into it as you get the momentum, that's you take profits instantly, then that's different, right? That's different. But this all day, this thing's been trending to the upside. Yesterday, after it broke out, we should have expected it to find support. The news that came out, like I said, according to this stuff right here, and unless I read over it, it doesn't say anything about XRP. It's talking about ICOs and utility tokens and like everything. In fact, it actually does say something about not XRP, but Ethereum. It was near the end. But there's going to be somebody that's much better at analyzing stuff like this than me. What I do is I analyze price. That's my forte. Analyzing price. All right. But that was a big drop right there. So we'll see what happens moving forward. It's not even, the market hasn't opened yet. The New York session has, as far as the banking session and for FX, but for the stock market, you still have that chunk of volume coming, or that clump of volume still to come. Good morning. Good morning. Good morning, Janet's thoughts. What a retracement, or wait for a retracement. Yeah, you could do that, but you need to wait for the retracement at support. So that's one thing that I've noticed that new traders have a hard time doing, is waiting, right? They have a very difficult time to wait. So like this looked bad. This was the reason that we were looking for shorts yesterday. We were looking at this day to be like basically a pullback into what we identify as supply right here, and then look for a short somewhere near that region. And then we did get the push down, right? So we did get our trade off. We took our profits as it pushed down, but ultimately it ended up turning back to the upside. So this is the next high to liquidate. Does it have to? No, but it could. So yeah, you could potentially be bullish on XRP, but just understand that you're buying it literally at the high of almost the year. This is the high of the year. All right. Right here is the yearly open. So this is the very high on the year. You're buying it up towards the high of the year. You want to buy it cheaper, closer to the yearly open. I mean, this thing gave you multiple opportunities to be a buyer, but that was back in March. You could still be a buyer as long as your daily and weekly supports are holding. So here's last week, right there. That's the price you want to see hold. So I could say, yeah, I could potentially be a buyer there as a day trade. And then I would definitely be looking to take profits here. So this range here could be a buyable range. Let's mark it so we know it. Oh, it's right there, right under quarter res. So here, this region down here. So we don't want to see XRP lose 52.11 if you want to be bullish on it. Bitcoin's only up 1% on the day, so it's nothing magical. Now that would have been a nice little short. That definitely would have been a nice short. I did not take it. I'm more or less waiting to see what happens tomorrow, because I think what happens tomorrow, if they pause, because they still, even though there's a huge percent chance that they're going to pause, if they come out and do a hike, because everybody's expecting a pause, that would not be bullish for the markets. And I think for the rest of June, we can look for sell side activity. But as long as they come out and pause tomorrow, the next meeting is in July the 26th, so almost the end of July. So from tomorrow until July 26th, whatever happens tomorrow, I think will probably dictate the market's direction. Now, as far as the US 100, the Nasdaq and the S&P and stuff like that, they're all at resistance, right? So if you're going to look for trades, you definitely want to look for small trades at support. But they could pull back. They're overbought. The S&P 500 is definitely overbought on a daily basis. Look at right there. And the US 100 has been overbought for a while. All right. So we are expecting a pullback, but what you're seeing take place is a short squeeze. So many people trying to get short, thinking that 08's going to happen. So technically, this thing could pull back all the way to like 12.6 and still remain bullish. You see what I'm saying? We got to wait for a pullback before we can buy. If you want to buy Bitcoin, you buy Bitcoin at weekly support or daily support. Sorry. It's also a 3-day support. Are you leaving? Give me 1 second. All right, I'm back. All right, so yeah, this is 3-day support. It's also daily support. Okay, this is the weekly support way up here. So you can see this, right? Let's get rid of this because that's just the area we were looking for potential shorts. This is the range from here to here. So we can look to operate inside of this range. You have a new weekly support, but it's above the 3-day. So here's 3-day support. You traded into it and you rejected there. So although this still could be considered a pullback before the breakdown, this is the area to buy it. 25,741. If you think it's going to be bullish. Now, we thought it was going to break out. Here was the attempt, right? Traded up to the trend line right here. So we were wanting to see this be a pullback from weekly support. But then Gary Gensler came out with his news and boom, down. Right? So we really haven't gotten great news for Bitcoin yet. But you are at support if you want to be a buyer. Not right now, but you're close to it. This is the area. I put this out on Saturday's video. If you did not see Saturday's video, go take a look at it. It is right there. All right? 2 days ago, Saturday, I put that out. That was telling you that if you want to be a buyer, you want to buy here. Okay? Up in this area, up in here, this is where people are going to be looking to sell because they're trading the ranges. I know they're trading the ranges because of how price action is working. You get the moves up. Those are the moves you want to sell into. This is still kind of too small, in my opinion. We want to see it get up to like and reject up off of this. This is the main support level that we need to see Bitcoin reclaim and hold. Stick it and hold it. As long as it's trading under it, it's still, yeah, it still looks a little weak. So why are sellers selling on Bitcoin today when risk and everything else is moving to the upside? Let's check out what the dollar's doing. Nice move lower on the dollar, so we're getting downside continuation, which is beautiful. That's what we want to see. So Bitcoin is not trading inversely to the dollar anymore, and it's not trading correlated to risk anymore. Bitcoin is doing its own thing. Look at risk. But remember, we're expecting a pullback soon. I don't know if it's going to happen today or tomorrow, but we are expecting a pullback, but that pullback will be an opportunity to buy into it. Pound dollar. All right, so I am bullish on pound as long as I am bearish on the dollar. Okay? So, but with that being said, you are into resistance. So this is the area at which I took a short. Right in here at 1.26162. That trade paid me. I took profits. Probably going to be stopped out if this continues to go higher. So, and basically I took this short only as a hedge on my USD short trade. That's why I shorted it. Ultimately, I have a bearish bias on the dollar, so anything that trades against the dollar, I have a bullish bias on. As far as buying pound dollar today, no. You should have bought it at the close of yesterday. That would have been support. Bearish closes are support. Now, sometimes you're going to be wrong, okay? For instance, if you would have bought this, obviously, you was wrong. If you'd have bought this one, you were wrong. This one, you were right. All right? So buying this support, in hindsight, we know it worked, but there's no guarantee that it will in the future. That's why I say we can look for the areas to take the trades, but you got to be consistent. You can't use more leverage, all of that stuff. You guys should already know all that. Now, all you're trying to do is identify the areas where you trade and where not to. That will help your P&L curve. If you buy it right now, you're buying it suggesting that the breakout is going to continue, and it may. But the likelihood of it is less probable because price usually likes to trade in ranges. Occasionally you get a breakout. And if you're long down here and you get the breakout, then yay, right? But you don't want to buy up here expecting the breakout to continue. So it's all going to hedge on what the dollar's doing. The short entry on the dollar was yesterday, guys. Yesterday was the opportunity to get short on the dollar at the yearly opening range. And then boom, today you would be having that continuation. These are the areas that I want you to trade at. That's why I marked them out. As far as the pound, you don't have you're in bullish continuation mode. So that you can't look for a trade. You're above last week's close, so you can start to find sellers, and you got this resistance up here. The area to be a buyer is to wait and see what happens, find the lowest close, and then take your shot there. Right? So we're still not clear on the dollar, but that would have been the entry right there. You could have literally sold the weekly high, but it could reverse tomorrow if the Fed decides to hike. And they could. Obviously, the market's pricing in that they won't, but they could. It's a small risk, but it's still a risk nonetheless. So I would give pound dollar some time to relax. You know what I mean? But it has been bullish for the last 2 days. Good cold water does the body good. See, oil is at support as well, right? So you never want to be a seller down here. You got to wait for a clear breakdown. And then upon retest of that, you could be looking for short entries. But this has been in a range for a while, so. Yesterday, oil was bearish. Today, it is having a pullback. Why? Because into support, this is where individuals will take profits. That's why you get bounces. That's why you get pullbacks. You will also have new people looking to buy this because it is at support. If they expect oil to continue in the range, the overall range, here it is. So it does look like June may close bearish, but we shall see. Can't sell it into support. You got to get them on the upticks. Aussie dollar, look at this. That was a beautiful short entry and it played out for many days, but Aussie has been extremely bullish. Why is this? Well, Aussie dollar is also considered a risk on currency. So if risk is on, this asset tends to be bullish. It has been bullish for the last few days, but it is coming into an area where you cannot buy it, right? You have to wait for it to get above this, and then you have to wait for this to act as support. When that occurs, it may not, you may get a breakout and it may trade all the way up to here, but you wait for a retest or a support. Then you can look to be a buyer. If you miss it on the first support, wait for another support. And it is moving. For the rest of the week on pound, we'll determine whatever the dollar does. So since the pound is moving up, it kind of is a little bit scary because typically we look for Tuesday or Wednesday to generate the high of the week or the low of the week. So it being a Tuesday and it's trading up on highs for the week, you know, we typically look for these type of areas to be the entry points for shorts. That is, of course, if we expect it to pull back, right? Because the low of the week could be in. This could be the low of the week. But it being Tuesday, this could also be the high. You see what I'm saying? The price could trade all the way back down to here. This week. So I wouldn't be a seller of it today based on the CPI. Or you could wait till 9:30 and take a chance at a short on it. But I mean, that's betting that the Fed is going to hike tomorrow. But the markets could pull back even if we get the news of a pause. The markets could take that as an opportunity to pull back into a support for buyers to basically re-engage. That's why trends commence. You got firms that rotate capital, right? But they're doing it mostly on a monthly or quarterly basis. They're not really doing it intraday. So funds will typically take entries, you know, at the beginning of the month or at the end of the month. All right. That's where firms will generally take entries or on the quarter. That's why monthly and quarterlies are, in my opinion, and yearlies are the best time to look for entries because funds will take entries based on that alone. And then they will, you know, they'll take their profits and they'll wait for the pullback and then they'll engage in buying support wherever that support ends up being. But the pound dollar on a lifetime basis has been bearish, basically. All right. We got bearish on the pound dollar up here. That was based on a trend line. And that bearish play worked out to perfection. So everything hedges on this, right? Like I said, people look at this and obviously the dollar's in an uptrend. Trend is very subjective in the way that it is taught to traders on YouTube, right? It is very subjective. It depends on the time frame that you're looking at. That will determine the trend. And how many bars are you looking at? And why are you looking at that specific amount of candles? So you could cherry pick this and say, yeah, this is just a pullback for the downtrend, right? Clearly it's not, because this is '04, right? No, these are, you look for the yearly opens. So for the last 3 years, 2021, 2022, now 2023. So 2021 was bullish. Look at that. If you'd have bought the yearly opening, 2021, quarter two would have spooked you, but it was still a buying opportunity. Up she goes. New year, 2022, rips. Boom, straight up. Now, there was a low put in, obviously, right? But once you got back above the yearly opening, that was bullish. Now, here we are. New year. What does it look like? We're only 2 quarters into the new year. The third quarter is going to start in 17 days. 17 days from now, you could literally buy or sell on that day, depending on how much leverage and stuff like that you use will obviously dictate whether or not you're right or wrong. But ultimately, if you're trading under this, we're looking for the dollar to continue. So far, it's been sideways for 2023, but Q2 of 2023 was an inside quarter. It traded inside its previous quarter. This is never a bullish signal. Now, if it closes up here, then you'll wait for a pullback down to there and you'll buy it for Q3. But I think Q3 is going to see downside continuation. And that downside continuation could happen as low as 98.42, right? You could trade all the way down to here next quarter. Or it could continue to trade sideways. But we know inflation is coming down. Like I said, only 2 more full points. And it'll be at the Fed's target rate. So them pausing now isn't considered to be terrible news. Now, if they would have started pausing because of a massive bank collapses, which we did have 3, okay? So what everybody was calling a banking crisis for 2023 was based on 3 bank failures. That's in the US alone. I'm not talking about the one that happened in Switzerland. Obviously, that's a big bank, but that's a different country, different things. But in the US, you can't call it a banking crisis when only 3 out of 4,500 banks have collapsed. And 2 of those banks were crypto-friendly banks. So a conspiracy theorist would say that you have 3 bank failures instead of 1 because of Gary Gensler and the Fed targeting those 2 banks specifically because they were 2 of the biggest crypto-friendly banks in the US. So technically, and that's based on interest rates and other things, so that's why they think that the banking crisis is going to continue. But if the Fed starts to pause and then inflation continues to trend lower, then the Fed could ultimately start cutting. Now, I'm not saying that that's going to happen in 2023. I'm just saying they don't want to stay restrictive for a long time. They're only restrictive is because of inflation. That is literally it. They had to get inflation down. If inflation was still cruising at 2%, you would have never gotten any rate hikes this year. And when they started early 2021, and it's been a very aggressive rate hiking cycle. So here you go. right? It's just been straight up. So yeah. And the bond market, or the 1 month bond yields, are predicting that they're going to stay at 5%, in between 5 and 5.25, right? It's at 5.13. This asset right here is, I mean, you compare it yourself, right? Let's just compare it to the Fed funds rate. Wow, that's amazing. That's amazing. So that's what this basically is coming from, right? This is market pricing in pause. Obviously, if this would have closed up in there, then not the orange line, but this monthly wick way up there, that would have been the market pricing in more cut or more hikes. So we'll see what happens tomorrow. Bitcoin, where are you at? Bitcoin's still struggling. Let's see if we can get a buying opportunity here. It's not quite at the daily open yet. Sellers are mid-range, or the most volume is traded mid-range. So this is the price to watch. If you get a pullback into 25,856 right here, could be a buying opportunity. I don't really like the fact that Bitcoin is selling off with good inflation news. It kind of looks like the overall trend of Bitcoin is wanting to continue to be bearish. So far, Bitcoin wait until pullback the daily support to take along about 25,800. Yeah. And that's, you want to see that holding on at least 30-minute closes. You don't want to watch the 5-minute time frame, because what you'll do is you'll buy as soon as a wick comes in there, right? Like on the wick, you'll buy it. And that's not necessarily what you want to do. You want to watch like the 30-minute time frame. When it stops closing lower candles, then you could potentially buy there if you think it's going to go up today. I wouldn't go no lower than 15 minutes. 30 is like, usually I watch the hourly. It's the best to tell you what's going on. Like, forget this, because this is all news. That's just a liquidation, a spike, and then anybody that got long early, they're gone. They're done. The market's going to open up in 15 minutes. And so far, hourly support is holding. This is the lowest hourly close in today's range. Well, it's not in today's range. Obviously, the open of today's candle is the lowest close, but then you had 2 hours of up, and then you've been trading sideways, maintaining this price. So if this hour closes under it, that's not going to look great, right? Because basically you will have a move up, and then boom, you'll be right back to bearish on the day, which is on a bullish news day. Because Bitcoin literally was being traded as a risk-on asset. Now it's doing its own thing. Doing its own thing. So trade it on its own merits. On a daily time frame, like, it's not really being able to get much traction, is it? You're still trading inside of this day's range. Big move on Saturday. Friday was a tiny day, and then Saturday, and then Sunday, yesterday, today. So you're still trading in Saturday's range. which is not very good. It does suggest weakness. But everybody, like, there's a few people in the Discord that were watching this price right here to short Bitcoin. Because that was the area that I was looking for potential resistance to hold. So some people probably took that short. If they were smart, they waited. It's hard to do, though. It's hard to do. This 5 minute, if you would have put your stop above this high, you'd have got stopped out. But if you waited until the news and then shorted the wick, once it got back under 26346, you'd be taking profits now. Before the US or before the New York Stock Exchange opens, because this could get bought right back up. Because all the other risk markets are taking this as bullish, but they could get sold off. So it's one of those things. It's good news, but we know the NASDAQ is definitely overbought. I mean, look at the thing go. You're right into a weekly res. Above it, but into it nonetheless. So you don't want to necessarily be a buyer. All right. PedX says, or PredX, expected to see a much better move today considering they will pause tomorrow. I expected that too, to be honest with you. That's why I didn't take the short, right? Because there is such a high probability that they will hike. But we never know what they will do. And like I said, just because the news comes out bullish, it doesn't necessarily mean that the market's going to be bullish. But since Bitcoin has been bearish, you would expect people to start buying here instead of being a seller, right? Because it's at its low. Whereas these assets are trading at their highs of the year. Bitcoin has been pulling back. So I figured Bitcoin would get bullish after the news. But still, the Hindenburg of news is the fact that Gary Gensler is still, unfortunately, the chair of the SEC. And he has already filed the lawsuits. That has already happened. So that could be a potential reason why Bitcoin is unable to get bullish, because those lawsuits still remain. I think if they would just take the lawsuit off of Coinbase, that would help out a lot, and then change the lawsuit to Binance based on its scrupulous actions, right? Like 1% of when Binance US opened, 99% of the volume traded on that first day was market making firms. So, and essentially CZ owns those market making firms. So he was basically 99% of the volume traded on that day was him and him alone. You see what I'm saying? That's illegal. That's illegal. I mean, I don't see how the SEC can sue Binance, but because they're in a different jurisdiction, but whatever. I guess the U.S. government has no bounds, no boundaries. It can sue wherever. It's not criminal. That's why they can do it. It's not a criminal lawsuit. And then Michelle, finally, sorry, I've been trying to work my way down to you. Hey, Heath, could you check out AUDUSD? Yeah, we did, but we'll go look at it again. Where are you at? Where are you at? Where are you at? Right there. It's up 61% today. 0.61%, my bad. 0.61% of FX is a big move. So I mean, it's coming into an area that we know could act as resistance. It's definitely almost, well, I thought it would be now overbought, but it's not yet. But it is coming into a technical area of resistance. The monthlies or the weeklies are way off. So, and there is no monthly. So it's based solely on the daily. Let's see if we got on the 3-day. Yeah, we got a 3-day resistance. It's trading literally at 3-day resistance. But that yellow line is ultimately a major area of resistance because that's the yearly opening range. So anybody that has been a seller on the Aussie based on the fact that it started trading under, then those people are probably still going to take a short here. But the way this looks, like this is a 3-day time frame. You had several days of down. Boom. And then straight up. Like it almost looks like something has changed, right? But it could still find resistance there. I don't think you'll make a fresh yearly high and reverse. You know what I mean? I think maybe this was just the low of the year being set. And I love how it was basically set at support, but you did have a run on anybody that got long. Like from Thursday on. This was to take them out. And then up she goes. So obviously a lot of buying took place on this day right here. A lot of buying. The next day took off like a bat out of hell. See ya. So, I mean, it is at a very intriguing, interesting area. If the dollar starts to strengthen, then obviously I would expect it to fail. But if the dollar continues what I think it's going to do, then we'll wait for a retest of 68, 167. So we'll let it bypass that area, if you will. And then maybe sometime like August or whatever, we could look to be a buyer if it comes back in for a retest. Because you're probably going to get a run above that high. Let's see if it's a monthly high. Yeah, it is a monthly high. So you're still trading inside of May's range. So just because this looks super bullish, you're 17 days there's 17 days left on this candle. But it does look like, yeah, like something has changed here. But sellers will re-engage here. It's a fact. People that bought down here will take profits, and then you will have new shorts jump in here. So we'll see how it resolves with this area right there. Does it get above it and then instantly reject? If that's the case, then we'll probably look for near-term shorts. But I mean, it looks like it's trending back to the upside. Unfortunately, the moving averages doesn't work so good on a daily time frame with Forex if it's trading sideways, obviously, but we'll see if a trend does start to happen here. I like that close. So maybe look to be a buyer at 67419. Take profits on the move up if it does retrace based on a liquidation of this candle, which is May's high. Euro USD. Yeah. So we've been looking for longs on the Euro USD. We were expecting this to be a trap. Now it did push lower. I did take a long on that and I did get stopped out, and I have not been able to position myself long on it. Right? Because when you're closing dailies under it still doesn't really mean anything because you're so close to it. But I took the long on this day and then I got stopped out on this day. So I waited a couple days. Support came in. This day traded. So I basically waited for this to come back up and then I got long. I made money on the trade. I wanted to hold on to the rest of it for potential bullishness. But unfortunately, that trade got stopped out and I hadn't yet been able to position myself long. But this would have been a good spot. And you would have on this day here, on this day's close, you could have been a buyer, right? And then just use this bearish wick as your stop. And you would be up really nicely. Really nicely. So I still like it up. So we'll wait for it to come back into 1.07870 and see if that holds a support. If we get a retest of this, we don't want to see a massive breakdown. A massive breakdown, like a big candle slashing right through it, could mean that I'm wrong. But ultimately, yeah, I like it. I think it's just a pullback. It pulled back into support, and you're starting to see a little bit of momentum come up out of there. Not enough momentum, but you'll probably see that momentum tomorrow. But I do like it higher. I do think it's going to continue to go higher based on dollar weakness. So this week's going to be important for the dollar. Let's see how this looks. All right. Then you got this expansion up and fail. So we want to see this thing close under the 21. If that happens, then we'll wait for pullbacks on euro to be a buyer. And you could buy on the weekly, you could buy it at the weekly open. Forget about last week's high because you're trading well above it. So daily support is also the weekly open. I don't know if you'll get a pullback all the way down there or not. We'll see. Tomorrow's going to be big. So the market is about to open in 2 minutes. Dollars into daily support. Nothing on the weekly. Nothing on the 3-day. Ah, beautiful. I mean, see, you're trading still inside of this last 2-week candles range. So we definitely want to see this week close under there. And it also happens to be daily support. So it's a big level here for the dollar. A big level. So Bitcoin's trading back up intraday. It's not trading up very high. But on the hourly, if you're still liking shorts, then you obviously don't want to see any hourly closures above 26,187. If an hourly closes back above that, that's going to look a little better. But it's intraday. So intraday support and resistances aren't as good as daily support and resistances, obviously. This would have been the area to buy. Right? This was the main area, 3-day support. But then Saturday, you put in this day. So until you get a daily close below that, that's support. You can get wicks through it. You can trade under it intraday. But you definitely want to see that area hold. So that would have been the area to look for longs. And you had a chance to buy it. Literally. At the open. This candle is your open on the daily range. It opened, traded higher, and then traded lower, and ultimately closed. And then you got a spike under that, and see ya. So at the open. All right, I'm watching on the hourly. This is also an area I would expect it to stop if it's going to trade lower today. It's going to be difficult to manage a risk based on that because of this damn wick. See if we can get a better reading somehow. Yeah, I don't know. You got many small supports. That's the main support there. So it'd be a tight range of a trade. And because this candle did not close under that. See, if this candle would have closed like down here, then yeah, I would take the short up here and I would manage risk probably just above this candle's high. Or you could manage it above that one. But because it closed back up there, and trust me, it wicked all the way down here. So it had plenty of time to close under support. It just didn't. So it makes it you still got to stick with the trade to the upside probably. It's just the wicks make it difficult to manage risk. And tomorrow is FOMC. It's going to be interesting to see how Bitcoin closes today, for sure. And let's see if XRP is doing anything different or if it's continuing its descent. Yeah. It's trying to, but still, once again, here is your open on XRP. It's 3-day support. All right. I was wondering where that line came from. So you traded up, closed above. 3-day support is right there. This is the opening hour of the daily range for XRP. It happens at 8 p.m. Eastern Standard Time. So here's the open, close at 3-day support. You got a little push lower. That's where you would have been a buyer. Because it's 3-day support. It happened perfectly, though. Very rarely does that happen. But damn, man, it rejected hard up there. Mostly buying. Look at these two volume nodes. Blue is buyers, buy orders. You would have been a buyer up there. You got slaughtered. So this could literally just be a retrace of the news candle. So ultimately, you still see this down here. Like the day could go on. People could be buying it right there at 52.83. But I would want to see the day close out trading above this region, and I would want to see this point of control migrate back down here, as that would show constructive buying. If you don't see that, then this has probably just been a liquidation move, because remember, XRP's trading close to the high of the year. This is the high of the year. That's very important to keep in mind. So anybody that bought XRP at the yearly open, they're selling. VIX is down. Like, I don't have it. Let me pull it up. Where it was getting a spike down. Looks like it's pulled back a little. I mean, it's at the lows. And we did see extraordinary call buying happening. We did see that earlier on. But that has, I mean, you can still see that puts are freaking cheap, way cheaper compared to calls at the money. I wouldn't buy any puts or calls because the implied volatility is above 50%. But the reason the implied volatility is so high, like you would think, like, I mean, the reason this is so high is because tomorrow is the expiration, and that's also going to be on the Fed day. That's like you're paying so much for the actual calls. Like you could lose money on them just basically if the implied volatility continues to go lower, which obviously the market is saying that it is going to. Like 200 days out, the implied volatility is getting to the area where I could potentially be a buyer. And still, look at, I mean, that's just insane. So VIX is probably going to stay stuck. Like the VIX oscillates more than anything. It doesn't really trend, right? It just oscillates. So this is you're trading at pre-COVID areas, which is insane. When the VIX put in this low right here, people were saying you're probably never going to see a 12 or 13 VIX again. But it has broken down. You didn't get to 12, but 1330 is, that's 1360. 1350. Yeah, I mean, if you want to buy calls because you think that the world is going to end, go ahead, but you're paying a massive premium for them. Massive premium. Huge. So don't buy a lot of them. And I would buy them far out. Like, that's only 2 months. 65 days sounds like a lot of time, but it's only 2 months. It's not even a quarter. So be careful. You'll be paying a lot of money based on the implied volatility. That's what dictates, it's a big dictator of price. And then time, obviously. Well, there's more than that. There's delta, there's more, but implied volatility is huge. Because if it continues to drop, even if you go up, even if you're right, and say you buy $14 calls, even if price stays above $14, you could lose money based upon the implied volatility dropping. So it's when implied volatility is up like that, you want to be a seller. You don't want to be a seller. I wouldn't be a seller that far out, though. I would be a seller close because implied volatility is up so high. Like, you could sell freaking... Yeah, no, you're just picking up a nickel in front of a steamroller. Let's go out a week. Yeah, you could sell $20 calls for 9 days. The SPX is trading well outside of its expected range for this week. So, yeah, be very, very careful. Last week, you literally traded almost unchanged until the last day you gapped up. But this week, you're already trading well outside of the expected move. Oh, people will probably be selling like 44, 43.87s. That's based on the news. Tomorrow the Fed comes out. You could see this continue to trade higher today, and then tomorrow you could see it drop back into the expected range. Yeah, so I mean, the VIX could potentially move higher, but you're just paying a premium, a massive premium. So I don't really see a play on the VIX. I'm not sure what you were wanting me to look at the VIX for, but I mean, if the implied volatility was at 50 or lower, then I would say, hell yeah, buy calls. Buy calls inside the monthly range, but you could buy calls up to $16, $17, way out, like 3-4 months out, and then you could potentially make money. But as long as the S&P 500 goes up, the VIX is going to go low. But small pullbacks on the S&P 500 will obviously cause this thing to do that crazy stuff. It's an oscillating thing. Yeah. But people are buying them. So the shorts are wrong, right? That's when you know the shorts are wrong, literally. When you see implied volatility go up like that. Like, that is a short squeeze. The market has been bullish all year. The bears have been wrong all freaking year. All year long. I like a pullback soon, but nailing exactly when that happens, when the short squeeze stops, is going to be difficult. So if you want to buy VIX calls, I would buy at the money calls. And I would go out further. That kind of helps you, right? But you're still going to lose money if implied volatility goes down. Now, Bitcoin is struggling at the open. I don't like that. I figured that this thing would close up here. Bitcoin selling the midpoint of the daily supply zone back inside Monday's range. Peter, US 30. There you go. Yeah, it's ripping face. It is ripping faces off. This one has been difficult because it has been trading sideways all year. And this is your yearly high right here. You're probably going to have... Nope. That's the next area for potential liquidations. It's not a bullish engulfing monthly because you didn't take out last month's low, but it still looks good. You're trading above the yearly open, although you almost set a bear trap, didn't you? Look at what would have happened if you would have just bought monthly support on May. You literally would have bought the monthly low. And you would be sitting pretty this month just by buying support. It looks good. It looks like it's going to go higher, but you got to wait, man. You can't buy it. This one isn't overbought yet. It's getting there. But you're above that swing high. Next swing high is the yearly high. And then you have to start looking back in 2022 highs. But I would wait for support tests. You could wait for 33.551 or 33.758. You see, like, that would be the middle of the range. So if we're going to expect the Dow to be bullish for the rest of the year, maybe a midpoint of the range, this range, from yearly high to yearly open. So that would be this week's open. That still seems pretty damn high to me because that's right there. But it could hold as support there. But you have a daily support at 33,551, this bearish candle. That's where I'd be tempted to be a buyer. Good morning. Thanks, Heath, for Aussie. You're welcome, Michelle. Bitcoin did reverse, but it's just trading back to the hourly support. So we're not seeing much volatility come out of Bitcoin. No momentum, no volatility. You had volatility at the newsprint, and that's it. You're trading like 0.69%. Ethereum is red on the day by 0.03%. So that means it's trading just under the open and pushing. Yeah, Ethereum has no bullish momentum. Ethereum is trading under support too. All right, so this is what I would do. Like, if I think this thing's going to be bullish, this is the price that I want to buy. When do I do that? I don't know. Maybe if this 4-hour candle closes above it, you got 2 hours to wait to see how this 4-hour candle shapes out, but it still looks bearish. If you want to use 4-hour support, then you would get closer to the bottom end of the range, which would put you at 1731.63. If you get a retest of that, then potentially you could be a buyer of that. But that puts you well under daily support. You're trading well under 3-day support. So you're trading under where Bitcoin is currently trading above on Ethereum. Here's an old 3-day support right here. So just, I mean, you're buying it while it's in bearish control also. That's important too. But if you would have bought it while the bulls were in control up there, you would have been, because of the SEC. I think the SEC news is going to drive what happens to cryptocurrencies for the better part of the rest of the year. Nude is a guy inside the thing. He asked me where to look for sells. I'm wondering if he took the sell. I'm actually hoping he did. And he asked me on the 11th. So 2 days ago, I told him to watch that area for shorts. If you're listening to me, Mr. Nude, make sure you took profits, bro. I mean, just take profits and move your stop to break even. Don't close the whole trade. Just get your risk out of the market for sure. That way, if you get downside continuation, you'll be setting pretty, right? My short still did not get stopped out. My short is up here. I'll tell you exactly what price that short is at. It is at 26,683. So right in there, 683. So basically the 2-week support. Traded back up into it and I took a short entry. Let's see where exactly. Well, it was on Friday. I know that because Saturday I woke up and so it must have been on this candle here. It traded up into that 2-week support. I shorted it and bloop. AA pop. What is AA and pop? AAP. Oh, yeah. This one, massive gap to the downside. I think it is going to be a buyable asset. 71.33. I think you could, I wouldn't do it with leverage. I would just buy shares, right? As an investment because it's cheap. You're back at COVID levels. So, right? Interest rates getting lowered. So if interest rates start to get lowered, this will probably climb. So I mean, you just gotta ask yourself, is it of value to you? Do you think it's going to do better? Advanced Auto Parts is not as good as the other two, Napa and O'Reilly, but you don't want to be a buyer of those because they're literally trading at highs. Here's AutoZone trading at highs. You did get a little bit of a pullback, but this is like a safety stock. It just continues to climb. But if I could get a 20-cent pullback out of it, I might put on some shares. And O'Reilly, just freaking. So you can tell the difference in management. These three companies do exactly the same thing. They do exactly the same thing. They sell auto parts. They have different brands, obviously, of the parts. All right. So they have a contract with certain auto part brands, and then Advanced Auto Parts has contract with other auto part brands, and AutoZone, same thing. They all have different brands of car parts, but any one of those three stores you can go and buy any part to your car or truck or vehicle. So I mean, I think it's a good buy. I do. I think it's cheap. It's cheaper than it's going to be for a while, in my opinion. They did miss earnings. That's what caused a massive gap down. They have a management problem, but it's a publicly traded company. So shareholders, the guys that get to sit in the board meetings, they're probably going to make a management change. Trust me. The board members of shareholders never love it when their stock drops 71%. They will make a change. I think it's a good buy. I think it's a good buy. I think a year from now, it'll be trading well above $71. That's my opinion, obviously. I would not do it with leverage because, like I said, you could still see downside continuation. And if you use leverage, it's going to make it that much worse. But it is definitely cheap. And it is a good brand. I mean, it's a good brand. You see Advanced Auto Parts everywhere. And then Pop. I don't know what Pop is. This can't be it. Is this a crypto? Could you please? I literally bought at 65.83. Fantastic. Is Pop a stock or is it a crypto? Total population. Like, I don't know what this is. This isn't a tradable asset, is it? No. Could you clear up Pop for me, please? Unless you're in another country. Yeah. Not sure what you want there. Roku is also on the mend. I mean, this is another one that had a massive pullback. And they're a new company as far as the data we have. But I don't see the dinosaur, so it just could simply be it not loading. But obviously, it had a nice run. So it's cheap. Will they innovate and ultimately be a company that's still around in the next 10 years? I think so. And you were able to get it at like 80% off. So definitely should have bought it. I was telling people to buy in Netflix when it was freaking down at the lows because I already knew this company makes freaking money. And then you had another chance to, I was telling people to buy it down here. Look at this thing go. This is a gap right here. See? Gap. But still, Netflix makes money. Well, they need to change what they're doing, but ultimately they're going to make money. And July 14, 2023 puts. So you're selling it? Gotcha. Yeah, it's not an area where you want to be a buyer now. It's got momentum, but still, I mean, it's expensive again. It's expensive again. So down here is where you should have been a buyer. All of these things. Intel was like literally the last play on AI that hadn't got hit. So I was telling people to watch this and look at that. Right? I mean, it's beautiful. Traded right down to it and boom, boom, boom. Now, I don't know why it hasn't gotten such a good play. I guess NVIDIA is leading the competition when it comes to AI, but Intel's a good company. Microsoft is a good company. These were all things that I was telling people to buy back here at the beginning of the year and after June. Once we started to see inflation start to trend lower, I literally was telling people to start buying tech stocks. Chewy's one that I do like, but it's struggling. I don't know why it's struggling, but this one had a massive pullback too. And let's look at the almighty Tesla yearly open. Literally would have been pretty much the lows. I mean, within 18 bucks. $18 on a, what is it? $420 stock isn't nothing. It is ripping faces off. We were actually watching for gap fill. That's why this line is here. But as you can see, it did not get there. This was the next area that we were watching. And then boop, up. That's why we were watching it. It was weekly support. Look at that wick. Beautiful. Beautiful, beautiful, beautiful. You don't get no better than that. Bing, buy, and then literally see ya. So I wasn't the only one watching that price, obviously. What else? I don't know about auto parts. Tesla will be taking over with AI, and if oil crisis, EV Tesla in particular take over. Hey, Run DMC. Let me say this. All right, the average American wages will not permit them to buy Teslas, especially if they're paying a mortgage. Now, with that being said, if Tesla comes out with a vehicle that's around 16.5 or even up to $21,000, then I agree with you. But as long as they're at 65 G's, regular Americans, the majority of the country, is not going to be able to buy Teslas. Now, I understand why people are buying Tesla with AI, because eventually they think that it's going to be, if they do the share ride thing or whatever, and they have like robot cars driving around picking people up and taking them places, and it literally costs them like $1.50, then yeah, Tesla's going to be trading for multiples of where it's trading now. But that is a long ways off. How long have they been working on their self-driving stuff? Like years. And like, I haven't heard much news on that. So I'm assuming that they haven't had many breakthroughs in that department. With high inflation, that means batteries and everything's going to cost more. So, I mean, yeah, I love Tesla. I own Tesla. I own them. I like them for the future. They are an amazing company. But you think you can't buy Tesla parts at Advanced Auto Parts? Yeah, you probably can't. I don't know. I don't own a Tesla, so will I eventually? I don't know. I don't know. I think gas and oil is, I know they're trying to ban it, but that's a whole different administration. All you need is in 2024, a new administration comes in, and then gas and oil is going to be big again. There are so many jobs in the gas oil industry, like from drilling the oil to literally getting it to the gas station, and then all the gas stations. How many jobs do you think that is? There's no way it's going to be, you know what I mean? Like, it's just too big. You could not make enough green jobs to support the oil business jobs. Like, all the jobs in the oil business, say you outlaw oil, make it illegal, and the only vehicles you can buy are all electric, you're not going to be able to make enough green jobs to sustain the people that lost their jobs in the oil trade. They did the same thing in West Virginia when they shut the coal mines down. They literally said, we're going to bring green jobs to West Virginia. They didn't. So the thousands upon thousands upon thousands of coal miners are now working at McDonald's. And, you know, they made a lot more money when they worked in the coal mines. So I don't believe in this whole let's change the country to green. That's my opinion. It's not a political opinion. It is a investor opinion. There's too many jobs that would be lost for them to outright outlaw it. California can try it, but you'll see so many people flee that state. People that don't want to buy electric cars. If they can't drive a gasoline car in California, they'll move. And then good luck getting goods into California if diesel is outlawed. Because right now, 99.9999999% of trucks use diesel. Like all of them. All of them. This is a trucking Knight Swift Transportation Holdings. If you want to buy into trucking, transportation, this is the stock. I guess Swift or Knight bought out Swift, or Swift, I'd say Knight bought Swift since their name is first. But the biggest trucking in the country right here. And the stock doesn't fly, but it's not super volatile either. So it's a good investment vehicle, right? Because trucking is going to be here forever unless they figure out how to deliver goods and services across the country. Because this is a consumer country. We are consumers. So we need those things. Electricity, I just don't see it. Maybe in 10, 15, 20 years, but right now, nah. We're a long way from that. I know I canceled I know everyone I know canceled Netflix. Yeah, but they'll change their Netflix is what you would call, like, they literally disrupted the way it was done. When I was a kid, a little kid here in Florida, my dad used to take me to a place called Video Express. And they were like in every single Publix outlet in Florida. There was a Video Express. And we would go in there and we would rent VHS tapes. They had a little back apartment where the adults would go and everything. Then Blockbuster came out and put Video Express out of business. Then Netflix put Blockbuster out of business, right? Because everything shifted to streaming, and so they literally led the way on that. So Netflix will always have that. So in my opinion, like, it's going to be hard to beat them. Now with what they've been doing lately, I don't want to get into politics, but yeah, that's going to definitely hurt them in the long run. It really will. I mean, this last documentary they put out, literally based on zero fact. And it's a documentary. Those things are supposed to be fact-based, whatever. Like, that's totally horseshit, right? If they keep putting stuff like that out, they're probably going to see a massive drop. The reason a lot of people dropped it is because people had to go back to work. They were Netflix and streaming services and everything, work from home trade, if you will. You know, that there's always something. This year it's AI. What, 2 years ago it was, or 3 years ago it was pot stocks. There's always something, almost every single year. The from March 2020 it was the stay at home and, you know, tech trade, and then before that it was all the pot stocks. I was trading the pot stocks. It was fun. But if you look at them things now, they're not doing so good. My brain won't work, and I can't even remember the main one that I was trading. Oh, it don't matter. Tesla costs around $30K. Which one? Or even less with incentives. Like the Model 3 or the Model X. I mean, I see base prices on Teslas. Let's see. Let's go buy a Tesla. Model S Plaid, 90 grand. A 2018 Model S 75D, 45K. That's used. 2021 Tesla Model Y standard range, 37.9, and that's used. 44,000 miles. So let's see if we can do this. Base price, Tesla vehicles. There you go. From 47,490, 4240, 98 for a Tesla X, 98 grand. From 88. Obviously, that means these are high values. It says from, and then it goes lower, of course, but MSRP, that's the manufacturer's suggested retail price. Oh, which one is 30K and less? But still, 30K is an expensive vehicle for most Americans. Not all, because like F-150 is like one of the biggest selling brands in this country, and obviously they start at a very high They're like 40, 50 grand for a base model F-150. I don't know. It's just me. Like, I think Tesla's more for the newer generation of kids than it is for like my class, right? But we'll see. I wouldn't mind owning one. Everybody that has one loves them. They don't really like um, getting them fixed because it seems like it costs so much money to get it fixed. And like literally, you have to go to a Tesla dealer to get them fixed. Not many people around where I live fix Teslas either. Or if you do let them fix it, if they can fix it, it negates the warranty. There's all kinds of crazy stuff that goes on. But once they fix all that, of course, and they get their base price cheaper, yeah, they're gonna sell more cars. Tesla is growing. They are selling more cars than they used to. So obviously more and more people are starting to buy them. They look fantastic, right? I think they look sharp. There's a 2020 model, $26,000 with 85,000 miles. They're slick. This is the one I want to buy. I just can't stand. I can't see myself paying 90 grand for a freaking vehicle. You could buy a small house for that. Oh, well, not anymore, but um good points. If Tesla Auto Parts depends on intellectual property and technicals, so Tesla parts would be difficult. Though Auto Parts play was also the inflation play hedge for yes, it's not a growth. It's not like a growth stock, right? It's not the high beta tech plays. It's the safe play. It's the standard 401k play for sure. Absolutely. For sure. Value stocks, right? That's value is like what you do when there's high inflation. A lot of value plays they were doing good, right? When everything else was shit in the bed. There's a bunch of them. Value. Growth is like more, it's just more risky, is all. It's just risky. But those are the plays. I mean, tech is here to stay, guys. Tech is here to stay. Bitcoin breaking down. So that's another hourly close lower. Will it turn around at the open? We shall see. Right here is the open. This is daily support down here. All right. I think markets are showing in advance something big is coming. Weird to see these parts companies sell off. Well, they're not. I mean, only Advanced Auto Parts did. Only Advanced Auto Parts did. AutoZone is not selling off. Like it's pulling back at best. This is all-time high. That's not a sell-off. Like it's only been pulling back for 4 weeks. And then O'Reilly, this is all-time highs right here. 3 weeks. It's not selling off. It's profit taking at best. Capital rotation. People taking money out of the safe trade, putting it in the more risky AI trade, if you will, right? The reason this is down so bad is because of a managerial standpoint, right? But this is also a dividend payer stock. But I mean, I don't know what the gray means. What is this? when I'm looking at a company, basically the way I invest is the company profitable, right? That's the main thing right there. There's a free website that you can use called FinViz, right? It's free. And you can literally find out if your company is profitable or not, all right? So right here, for instance, I was being asked a question about this last week because some guy put out a video saying Neo could reach $1,000 in the future, but they still are, this is their income, negative $2 billion. That means that they need to make $2 billion in order to be at break even. Now, clearly, if this number starts to go up, right, out of the negative and starts to go up, then I would say probably, yeah, the stock will start to grow. Neo, if you don't know, is the biggest manufacturer of electric vehicles in Asia. So, I mean, is it investable? Yeah. Its all-time high is $67. 1,000 is multiples upon that. But for now, they don't make money. So if you want to look for investments, find investments that make money, right? They make money. They make money. Look, positive 94.32 bill. They're positive. They make money. That's what you want to see. You want to see a company that makes money. If the company don't make money, here, let me see if there's, where is it at? There's a company that I was watching. Yeah, this one right here. So they build charging stations, right, for electric vehicles. They do not make money and they miss more than they hit on earnings. But all you got to do is just go see, do they make money? And they don't. But they're a small company, right? Their market cap is only 446 million. So half a billion, not super small, but that's just their market cap. But they're still negative $106 million. They ain't making money yet. They're still not profitable. This has to turn to a positive number. Once that happens, then the stock will start to grow. It will probably start to grow before, like, investors will be on top of stuff like that. They watch that stuff. Like when they start to see, some of these things start to turn less negative, start to turn more positive, this turns into like negative 98 mil, then negative 80 mil, then negative 70, then you will see the stock price start to rise because investors will start investing in it, right? If you want to invest, that's the best way, in my opinion. Find a company that makes money first. And if you are investing in a company that ain't making money, then make sure you're staying on top of its earnings, right? Because that's showing you potential, right? Chewy, for instance. I like Chewy. I think it will. Ultimately, I think they got a good business plan. They're positive right there. I mean, they look good. I'm not sure if this is right. Clearly, that looks wrong to me, but they make money and they're still like not going up. So something is, yeah. I mean, now they're above the yearly open, so maybe we could look to start buying Chewy around 37.97 as long as it maintains the yearly open. If it can maintain that, then we could potentially see Chewy go up. Now these are investments; they're not trades, right? I'm not looking to jump into it with 100x leverage, which you can't in the stock market anyways. But you know, I'm not going to do it by buying calls. I'm going to do it by buying stock, buying the stock outright, and just holding it. Just add to the portfolio, but I strongly suggest that you guys invest in things that make money instead of things that aren't making money. So you know that Chewy makes money, right? This is a pullback, and it came off hard from the COVID trade. This was another one that was considered a COVID trade. Down at the lows because you couldn't go to the store to buy your pet goods or whatnot, or you couldn't find them. I have 2 cats, and during March 2020, for like a half a year, it was impossible for me to find Fancy Feast. You know what I mean? Supply chain issues, whatnot, everything was all screwed up. So that's why it did so good before that. That's why, because people were using their stuff. Now you have people that continue to use, but obviously they lost a lot of users once things became normal again. Because I think it's more expensive to buy the same brand of dog food or cat food than it is if you just go to Walmart and get it, right? But it's more convenient. Like my neighbor buys all of her dog and cat food from Chewy. It's delivered every single week. A big gigantic box of dog food and a giant box of cat food because she has like 10 cats and 4 dogs. But she buys it all from Chewy. So I like Chewy. They just need to do something to make more money. They lost a lot of people. It's like Netflix, right? They lost a lot of subscriptions. This is a subscription-based company. So, but I don't own a subscription, but I do buy from them sometimes. But I can also, like, I just bought some flea medication for my cats, right? I went through Amazon instead of Chewy. I don't know why. I didn't do research. I just instantly, boom, hit up Amazon. Amazon is, in my opinion, a good company to own, but probably don't want to buy it now because it's, up. It's up on the year. So it needs a pullback. But this company is it's going to continue to grow. Amazon's not done. It's not the way it works. They haven't been doing so good, but they're definitely a good company. They've had so many splits. I remember when this stock traded for $2,000. The Model 3, gotcha. All right, guys, we're going to wrap it up. Also, remember, Teslas will be second-hand market now, too, building up. Yeah, for sure. Absolutely. Absolutely. Because they're battery operated and they don't use oil and they have less moving parts, I would say it's probably, that's why they retain their value so much, buying them used. Like literally brake pads and disc brakes or discs, rotors and brake pads are like literally the only thing that you have to buy. Tires, right? Stuff like that. Probably not so much brakes either because of the regen braking, but still, you get my point. Whereas oil filters and everything else on the other. So I definitely see them growing, and I own Tesla for sure. Absolutely. It's a fantastic, fantastic business, and it's leading the way in America for electric vehicles. Have they? I mean, for a long time, Tesla was not profitable either, and they were still flying. Yeah, they're profitable now. Well, they've been profitable for some time now, but I remember when they weren't, and the stock was still flying. because people weren't buying it. They seen the business plan. They knew eventually it was, I mean, there for a while, like every single quarter, their sales estimates were growing and they were hitting higher numbers each quarter. So that's what ultimately drove the stock to insane prices. But we had the pullback, you know what I mean? We had the 2022 bear market, which allowed people to invest in these high flyers at a premium, at a discount. Not at a premium, but at a discount. That's why I was telling people to buy. These things were at huge discounts. And if they're good companies, if they have good company models, their business plan works, they make money, they're profitable, their stock's going to go back up. It's just a matter of time. This was fear. And some of it was, you know, the 60-40 investment plan. It wasn't working. It was getting stopped out. So that's, you know, but once that changes and gets back to the point to where, you know, you can get back to the 60-40 investing plan, you'll see this again. Maybe not such a high rise like that, but over time, that's what I'm talking about here. Over time, you're going to see things go up. So this is the 60-40 right there. So that's why you see massive down moves, because those bots are still doing the 60-40. And then they have to start readjusting and doing things differently, and then they get it figured out, and here we go, right? So wait for the pullback and start to buy the dip. When do you stop? Well, if inflation starts going back up, then I would say slow your roll on buying the dip. But as long as inflation is trending lower, I say, yeah, it's good stuff. Until the battery dies after 100K, and then it costs 30K to get a new one. Yeah, batteries are super expensive. They need to bring that cost down. I mean, think about that. $30,000 is half the cost of the vehicle. So they'll figure it out. Technology's getting better every single day. They'll make a car that's cheap. You won't be able to get 400 or 500 miles on it on a charge, but 220, 250 miles on a charge. And if it only takes a couple, 30 minutes to charge it, you could drive that car all over the country. Right? And if they could get the price under 20 grand, like that's parity almost. If they can get it under parity, then boom, shakalaka, they're going to grow for sure. I like Tesla as an investment. I also like to trade it because it moves. Its options move. It's a high beta. They're expensive always. So Tesla is a good trading stock, and it is a good investment, but not right now. It's doing decent on implied volatility, but just look at it, like $13 at the money at $250. It's a fast mover, man. It's a good trader. Like this is intraday price from 256 to 245. There's a lot of alpha can be generated there. So it's a good trading stock. It's a good owning stock. Wait for it to pull back. Wait for it to pull back and then pick some up if you want to invest in it. But it's been moving higher, like nonstop. So don't buy it up here at 250. Give it time to pull back. Give it time to get a little cheaper than buy it. Let's see. This was the first breakout of the range back here. Tesla was trading in this big range back way before it split. It was like from 278 to like 130 in this range back here. right? It's been split twice since then, but I can remember this range, trading it. And then here was the breakout. Massive breakout, but then you can see like it pulled back all the way to the breakout zone. And then off to the races it went. Like just skyrocketed. Insane growth. So this was back when it was $200 down in that range. I mean, 2-3K. But they did the splits, which I think is a good idea because it makes it cheaper for people to buy the shares, which is the whole purpose of the split in the first place. But I like it. I definitely like it. I think you're probably safe to say that this is the low down here for now, right? But that's only as long as everything continues to work the way it has been. Inflation trending lower, then the Fed starts to cut rates, right? Stuff like that, then you're going to see new all-time highs. If we have a big, massive credit crisis later on down the road, like people are predicting, then obviously these will make new lows. It's as simple as that. You guys have a fantastic day. We will be doing the same thing tomorrow, but it'll be around 1:45. We'll go live for the minutes. The minutes come out at 2:00, and then the speech is at 2:30. So we'll be live for that time. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading. Few ledges.